Student loans are a common way to finance higher education, but they can also be a burden on your finances and your future. According to the latest statistics, the average student loan debt in the U.S. is $37,693, and the total student loan debt is over $1.7 trillion. That's a lot of money to pay back, especially with interest rates that can range from 2.75% to 7% depending on the type of loan and when you borrowed it. If you are one of the millions of Americans who have student loans, you might be wondering how you can pay them off faster and save money on interest. After all, the longer you take to repay your loans, the more interest you will accrue and the more you will end up paying in total. Plus, having student loans can affect your credit score, your ability to save for other goals, and your financial freedom. Fortunately, there are some strategies that can help you pay off your student loans faster and save money on interest. In this article, we will cover some of the most effective ways to do so, such as making extra payments, refinancing your loans, applying for forgiveness or repayment programs, using a debt snowball or avalanche method, budgeting and cutting expenses. By following these tips, you can reduce your student loan debt and achieve your financial goals sooner. Let's get started! Making extra payments. One of the simplest and most effective ways to pay off your student loans faster and save money on interest is to make extra payments whenever you can. This means paying more than the minimum amount due each month or making additional payments in between your regular ones. By making extra payments, you can reduce your principal balance, which is the amount of money you owe before interest. This will lower the amount of interest you will pay over time and shorten the repayment term of your loan. For example, if you have a $10,000 loan with a 5% interest rate and a 10-year repayment term, and you pay an extra $100 per month, you can save $1.03 in interest and pay off your loan 2.5 years earlier. To make extra payments, you can use any extra money you have, such as a bonus, a tax refund, a gift, or a side income. You can also set up automatic payments from your bank account or use a Roundup app that transfers your spare change to your loan account. However, before you make extra payments, make sure to check with your lender if there are any prepayment penalties or fees and how they will apply your extra payments. Ideally, you want your extra payments to go towards your principal balance, not your interest or future payments. Refinancing your loans. Another way to pay off your student loans faster and save money on interest is to refinance your loans. This means taking out a new loan with a lower interest rate and/or a shorter repayment term and using it to pay off your existing loans. By refinancing your loans, you can lower your monthly payments, reduce the total amount of interest you will pay, and pay off your debt sooner. For example, if you have a $30,000 loan with a 6% interest rate and a 10-year repayment term, and you refinance it to a 4% interest rate and a 7-year repayment term, you can save $5,494 in interest and pay off your loan 3 years earlier. To refinance your loans, you will need to shop around for the best rates and terms from different lenders, such as banks, credit unions, or online platforms. You will also need to meet certain eligibility criteria, such as having a good credit score, a stable income, and a low debt-to-income ratio. Refinancing your loans may also come with some costs, such as origination fees, closing fees, or application fees. Refinancing your loans can be a great option if you have high-interest loans, especially private loans, and you can qualify for a lower rate and a shorter term. However, refinancing your loans may not be the best option if you have federal loans, as you will lose some of the benefits and protections that come with them, such as income-driven repayment plans, deferment and forbearance options, and forgiveness programs. Therefore, you should weigh the pros and cons of refinancing your loans carefully before making a decision. Applying for forgiveness or repayment programs. Another way to pay off your student loans faster and save money on interest is to apply for forgiveness or repayment programs that are available for certain types of loans and borrowers. These programs can help you reduce or eliminate your student loan debt depending on your profession, income, or service. Some of the most common forgiveness or repayment programs are Public Service Loan Forgiveness, PSLF. This program forgives the remaining balance of your federal direct loans after you make 120 qualifying monthly payments while working full-time for a qualifying employer, such as a government agency or a nonprofit organization. Teacher Loan Forgiveness. This program forgives up to $1,700 of your federal direct or FFEL loans if you teach full-time for 5 consecutive years in a low-income school or educational service agency. Nurse Corps Loan Repayment Program. This program pays off 60% of your unpaid nursing education debt over 2 years if you work full-time in an eligible critical shortage facility or serve as nurse faculty in an eligible school of nursing. Income-driven repayment, IDR plans. These plans adjust your monthly payments based on your income and family size and forgive any remaining balance after 20 or 25 years of repayment, depending on the plan and the type of loan. To apply for these programs, you will need to meet certain eligibility requirements, such as having the right type of loan, working in the right field or sector, making the right number of payments, or having the right income level. You will also need to submit the necessary documentation and forms to your lender or servicer and keep track of your progress and status. Applying for these programs can be a great way to reduce your student loan debt, but you should also be aware of the potential drawbacks, such as tax implications, longer repayment periods, or limited career choices. Using a debt snowball or avalanche method. Another way to pay off your student loans faster and save money on interest is to use a debt snowball or avalanche method. These are two popular strategies that can help you prioritize and organize your debt repayment, especially if you have multiple loans with different interest rates and balances. The debt snowball method works by paying off your smallest loan first, while making the minimum payments on the rest of your loans. Once you pay off your smallest loan, you move on to the next smallest loan, and so on until you pay off all your loans. The idea behind this method is that paying off your smallest loan will give you a sense of accomplishment and motivation to keep going. The debt avalanche method works by paying off your highest interest loan first, while making the minimum payments on the rest of your loans. Once you pay off your highest interest loan, you move on to the next highest interest loan, and so on, until you pay off all your loans. The idea behind this method is that paying off your highest interest loan will save you the most money on interest and reduce your total debt faster. To use either of these methods, you will need to list all your loans by their balance or interest rate and allocate any extra money you have towards the loan you are targeting. You will also need to stick to your plan and avoid taking on any new debt. Using either of these methods can help you pay off your student loans faster and save money on interest, but you should choose the one that suits your personality and preferences better. Some people prefer the debt snowball method because it gives them more psychological satisfaction, while others prefer the debt avalanche method because it gives them more financial efficiency. Budgeting and cutting expenses. Another way to pay off your student loans faster and save money on interest is to budget and cut expenses. This means creating a realistic and detailed plan of how much money you earn and spend each month, and finding ways to reduce your spending and increase your income. By budgeting and cutting expenses, you can free up more money to put towards your student loans and achieve your financial goals sooner. To budget and cut expenses, you can use various tools and techniques, such as tracking your spending. You can use an app, a spreadsheet, or a notebook to record and categorize all your expenses and identify where your money is going and where you can save. Setting smart goals. You can set specific, measurable, achievable, relevant, and time-bound goals for your financial situation, such as paying off a certain amount of debt or saving a certain amount of money by a certain date, and track your progress and achievements. Using the 50-30-20 rule, you can divide your after-tax income into 3 categories: 50% for needs, 30% for wants, and 20% for savings and debt payments. This can help you balance your spending and saving habits and prioritize your financial goals. Cutting unnecessary expenses. You can review your spending and identify areas where you can save money, such as subscriptions, memberships, dining out, entertainment, or shopping. You can also use coupons, discounts, or cashback apps to save money on your purchases. Increasing your income. You can look for ways to earn more money, such as asking for a raise, finding a better paying job, starting a side hustle, selling your stuff, or investing your money. By budgeting and cutting expenses, you can create a positive cash flow and use it to pay off your student loans faster and save money on interest. You can also improve your financial literacy and habits and prepare for your future. Conclusion. Paying off your student loans faster and saving money on interest can be a challenging but rewarding goal. By following the strategies discussed in this article, such as making extra payments, refinancing your loans, applying for forgiveness or repayment programs, using a debt snowball or avalanche method, and budgeting and cutting expenses, you can reduce your student loan debt and achieve your financial goals sooner. However, remember that there is no one-size-fits-all solution for paying off your student loans. You should consider your personal situation, preferences, and objectives, and choose the best option for you. You should also consult a professional before making any financial decisions and do your own research and due diligence.